Cryptocurrency has revolutionized finance, offering an exciting avenue for building wealth. If you're intrigued by the prospect of investing in digital currencies but unsure where to begin, this guide will provide a clear roadmap. 1. Understanding cryptocurrency basics. Before investing, grasp the fundamentals. What is cryptocurrency? Digital currency that operates on blockchain technology, offering decentralized and secure transactions. Key players: Bitcoin, BTC, Ethereum, ETH, and altcoins like Cardano, ADA, and Solana, SOL. How it works. Cryptocurrencies are traded on online exchanges and stored in digital wallets. Prices are driven by supply, demand, and market sentiment. 2. Why invest in cryptocurrency? 1. High growth potential. Bitcoin's value grew from a few dollars to tens of thousands within a decade. 2. Diversification. Adds an alternative asset class to your portfolio. 3. Accessibility. Easy to buy, sell, and trade online. 4. Decentralized nature. Immune to government control or inflation. 3. Steps to start investing. Educate yourself. 1. Research coins. Understand the use cases and goals of cryptocurrencies. 2. Stay updated. Follow credible news sources and market analysis. Choose a reputable exchange. 1. Examples: Coinbase. 2. Binance. 3. Kraken. 4. Look for low fees, security features, and user-friendly interfaces. Set up a digital wallet. 1. Hot wallets. Online and convenient but vulnerable to hacks. 2. Cold wallets. Offline storage offering maximum security. Start small. 1. Invest an amount you're willing to lose. 2. Pro tip: use dollar cost averaging to minimize volatility risk. Diversify your portfolio. 1. Don't put all your funds in one coin. 2. Combine high-risk and stable cryptocurrencies for balance. 4. Risks and how to mitigate them. Volatility. 1. Cryptocurrencies are highly unpredictable. 2. Mitigation. Avoid emotional decisions and focus on long-term growth. Security threats. 1. Hacking and scams are real risks. 2. Mitigation. Use strong passwords, enable two-factor authentication, and choose secure wallets. Regulatory changes. 1. Governments may impose restrictions. 2. Mitigation. Stay informed about legal developments. 5. Strategies for crypto investing. HODL. 1. Long-term strategy of holding coins regardless of short-term fluctuations. Active trading. 1. Buying and selling based on market trends. 2. Requires time, expertise, and a high-risk tolerance. Staking. 1. Earn passive income by holding coins in staking-enabled blockchains. Investing in stablecoins. 1. Pegged to traditional currencies, offering stability and low-risk returns. 6. Tax implications. Cryptocurrency gains are taxable in most countries. 1. Keep records of all transactions. 2. Use crypto tax software to simplify filing. 7. Tools and resources. 1. Tracking. Use apps like CoinMarketCap to monitor prices. 2. Learning. Platforms like Binance Academy and 3. YouTube channels dedicated to crypto education. Cryptocurrency investing can be a powerful way to build wealth in the digital age. While it's not without risks, starting with a solid understanding and a cautious approach can set you up for success. Begin small, stay informed, and diversify your portfolio. The digital future is here, and with the right strategies, you can confidently navigate this exciting investment landscape.